Wednesday, November 16th, 2016, Monaco 64, home of alternative economics and contrarian views. Just a quick update on the markets, especially the bond market or U.S. Treasuries. It's 11:22 a.m. London time, so 6:22 a.m. New York. We're seeing bond yields rise again this morning in Europe. Treasuries do trade in Europe. London has a big cash market in treasuries and futures trade in Europe as well. The CME is open and quite busy in the morning. So the 10-year yield right now is at 2.27%. It's up 5.5 basis points. The recent high the other day was 2.30, and then it backed down a bit, went below 2.20 yesterday, but it's back up today. So that means that 10-year note prices or 10-year note bonds, the reason why I say 10-year note, because technically the 10 years are a note and the 30-year is a bond, even though they're all bonds. But this is just the market terminology. If you want to sound, like an expert, that's how you say it. The 10-year note prices are down today and the yield is up. And why is that a problem? Well, because all financial assets other than bonds are priced off the risk-free rate of return of treasuries. And the 10-year note is the benchmark, treasury or yield. So we're at 227 right now. And that means, the price of money or borrowing for the U.S. government goes up. That's going to impact negatively on stocks, corporate bonds, and other assets. So we've gone, don't forget, from around 135 this summer in July to now almost, we're almost 1% higher. So the key levels to watch in the 10-year note in terms of yield is the 230, which we're very near, and then 2.5%, and then 3%. Now I'll put a link below to where you can get the price and the chart of a 10-year note. Let's have a look at the 30-year bond, which is also very important. That's up this morning 3.2 basis points. So it's at around 2.99. 3% has been the recent high. We've even gone above 3%. I think a few days ago we were around 3.03. The high for the last 52 weeks is 3.11. So those are levels to keep an eye on. I'll put the link for the 30-year as well below. The 52-week high for the 10-year, by the way, is 235. So yeah, 235 and 311 are the levels to keep an eye on. What's the rest of the market doing? Well, the Dow Jones is down 20 points or 0.1% at 18,881. S&P 2178 down about 2 points. Gold is 1224.50. We got up to 1233.33 this morning, but has come back down now when we're near the lows. So it's down about 4 from the 6 p.m. New York close. Silver, it's around 16.98, down about 10 from the 6 p.m. New York close. We did get up to 17.25 today. And the currencies, the pound is a bit weaker, down 1/3%. Euro down about 0.2%, and the dollar is stronger against the yen, 0.5% at 107. One thing I wanted to talk about in terms of the precious metals is that we had a fairly positive day yesterday in the precious metals miners, in the indices. The HUY index, that closed at 190.75. We need to get back above 200. That's a key level, but it was up 4.5% roughly, 4.47. And the XAU index, which is another precious metals mining index, XAU was up 4.52%, and it closed at 82.40, and 80 was a key support. So I just wanted to point out that the fact that the miners did well could be positive for the price of gold and silver today. Sometimes, you have a good day in the gold and silver, in the physical, in the metal, and then the miners don't do well, and then the next day, gold and silver dropped. So yesterday was kind of the opposite. Gold and silver really didn't do much, and the miners did very well. So keep an eye on the miners. That could be a signal that things are starting to bottom in the precious metals. So yeah, in terms of the politics, I think it's too early to tell, really. There's a lot of people trying to figure out what a Trump presidency is going to mean for financial markets, for assets. I mean, looking back to Reagan, for example, he was supposed to bring in, a conservative era for America. But if you think about it, he grew debt more than anyone except, the wartime presidents like FDR and Woodrow Wilson. So, debt under his administration went up 186%, the national debt. So is that conservative? So there's people, trying to guess what Trump is going to do, how things are going to react. I think it's early days, but one thing I'd say, those people who are saying, oh, he's going to bring fiscal spending, my questions are, where is he going to get the money from? The U.S. has 20 trillion in debt. I know he wants to cut taxes, but and I read the other day from another commentator on King World News, and he said, Japan has been doing fiscal spending for the last 25 years, and look where their economy is. Fiscal spending is just more government spending. It's not the free market. So I don't agree with people that think that fiscal spending by Trump is going to be great for the economy. Look what happened in the 30s as well. FDR did a lot of government spending, the New Deal in the early, from 1933 onwards. And in 1937, the economy kind of went down a cliff. The stock market crashed, so to speak. So I think it's early days. And Reagan as well, when he came in, we had a very sharp recession in the early, 81, 82. So it wasn't, plain sailing, so to speak. So I think it's still early days to say that Trump is going to be great for stocks, and that the economy is going to pick up right away. Fundamentally, nothing's changed. The U.S. has still got loads of debt, $20 trillion. That's more than 100% of GDP. We've got the unfunded liabilities, which are around 200 trillion. And, the banks have hundreds of trillions of derivatives still. So, yeah, let's take one day at a time, I say, and watch these markets. So I'll talk to you later. And, if you enjoyed this video, please give me a thumbs up. If you also haven't subscribed to my channel yet, please do. And share this video with friends, families, and colleagues. And if you'd like to donate, there's some links below in the description. I'll talk to you later. Bye.